The massive tide of the financial markets is currently surging toward a historic peak. In February 2026, the final pieces of the digital asset transformation puzzle quietly prepared by the asset management giant Fidelity Investments for over 10 years have finally begun to reveal their complete picture. Fidelity is no longer a mere observer of trends, but a master architect of market norms, successfully transplanting digital assets into the very heart of mainstream finance, using its overwhelming capital power of $17.5 trillion in assets under management. While the market appeared flat on the surface throughout 2025, a qualitative leap was occurring internally as institutional capital allocations deepened and regulatory frameworks reached maturity, the fruits of which are now unfolding before our eyes. The most symbolic event of this seismic shift is the official launch of the Fidelity digital dollar on February 4th, 2026. This stablecoin, issued by Fidelity Digital Assets National Association and pegged 1-to-1 with the US dollar, ensures both transparency and trust as Fidelity management, and research directly manages the reserve assets. The passage of the Genius Act in the summer of 2025 provided a clear legal sanctuary for traditional financial institutions to enter the digital asset market, and Fidelity is leveraging this to elevate stablecoins from mere crypto trading tools to a new standard for actual payments and wealth management. Investors can now securely operate digital dollars through Fidelity's platforms and participate in all financial activities on the Ethereum mainnet without traditional constraints. Fidelity's strategic gaze has moved beyond Ethereum to penetrate deeper into the high-performance blockchain. Solana. The Fidelity Solana Fund, launched on November 18th, 2025, introduced a breakthrough for institutional investors by providing not only exposure to Solana's price growth, but also quarterly cash dividends derived from staking rewards for contributing to network security. The commencement of these cash distributions in early February 2026 signals the evolution of digital assets into mature instruments capable of generating regular cash flows similar to equity dividends. To capture early market share, Fidelity has made a bold move by waiving all management and staking fees until May 18th, 2026, rapidly absorbing liquidity within the Solana ecosystem. From a technical perspective, 2026 marks the first year that blockchain technology has completely overcome hardware limitations. Solana officially activated FireDancer, its next-generation validator client, on the mainnet on December 12th, 2025, proving an overwhelming technical capacity of over 1 million transactions per second. This is not just a performance boost. It enhances network resilience and processing volume to a degree that allows high-frequency trading of traditional finance to be implemented on-chain. Furthermore, the Alpenglow consensus algorithm, introduced in the first quarter of 2026, has reduced transaction finality to under 150 milliseconds, transforming Solana into the fastest real-time settlement layer among global financial infrastructures. These technical advancements are the core engines accelerating the roadmap for giants like Fidelity to implement complex financial derivatives on-chain. The path of capital movement is also becoming clear. Morgan Stanley sent a powerful signal to the market on January 6th, 2026, by filing registration statements with the Securities and Exchange Commission for spot Bitcoin and Solana exchange-traded funds. Morgan Stanley's Solana offering is particularly attractive to institutional investors, as it uniquely includes a staking component to generate additional yield. The participation of such Tier 1 banks signifies that digital assets have become an essential component of mainstream portfolios, a fact further supported by Bitcoin spot exchange-traded funds, surpassing $2 trillion in cumulative trading volume. Moreover, the news that Western Union plans to build a stablecoin payment platform on the Solana network by the first half of 2026 to serve 150 million customers worldwide represents the pinnacle of how blockchain is leading a real-world financial revolution. The mainstreaming of real-world asset tokenization, or RWA, is another critical development to monitor. Fidelity views the tokenization of real assets as the primary battlefield of future finance and is betting heavily on building the infrastructure to distribute all high-value assets, including government bonds, stocks, and real estate, on the blockchain. The volume of tokenized assets on the Solana network surpassed $873 million in early 2026, reaching a new all-time high, while Ethereum continues to solidify its role as a global settlement hub by hosting over $160 billion in stablecoins. Notably, 2026 is seeing the proliferation of rights-rich token models, where token holders receive a share of network revenue or participate in decision-making, establishing a value creation mechanism similar to traditional corporate stocks. For investors, the most important factor is the virtuous cycle, where these technical leaps translate into actual value appreciation. The on-chain economy is structured so that as network activity increases, token value rises, and both Solana and Ethereum are optimizing this model in their own ways. Fidelity precisely analyzes this value creation process to provide optimal choices for investors and predicts that 2026 could be the inaugural year for fully on-chain initial public offerings. Numerous decentralized applications are already recording significant revenue on these networks, proving that digital assets are no longer intangible illusions, but productive assets that support real economic activity and receive compensation for it. The blueprint for future finance is becoming even clearer with the convergence of artificial intelligence and blockchain. According to Fidelity's research, automated financial systems, where AI agents manage assets on-chain and execute optimal trades, are emerging as a dominant trend in 2026. This is lowering the barriers to financial services and maximizing efficiency, bringing forward the Web3 era, where anyone in the world can enjoy sophisticated financial benefits. Fidelity is convinced that this technological innovation will fundamentally change the paradigm of wealth management and is continuing its aggressive investment in related infrastructure. In conclusion, all the changes we are witnessing in 2026 represent the completion of the digital financial grand plan that Fidelity has meticulously designed over the past decade. The innovation of value storage through Bitcoin, the automation of financial contracts through Ethereum, and the establishment of high-performance payment networks through Solana are now an irreversible tide. The emergence of the Fidelity digital dollar is providing the lifeblood of trust to this on-chain economy, and the massive capital of traditional finance has already begun its migration toward this new order. Investors must now look beyond short-term price fluctuations and recognize that the fundamental vessels of the global financial system are being replaced. The assets identified and backed by Fidelity are more than just coins. They are the core engines that will sustain the future economy, and joining this grand voyage is the most certain milestone for securing wealth in the new era.